Hey everybody, hope everyone is doing well and that they had a great trading day. I'm going to remove this banner thing at the top right. Cool. All right, so overall, I thought today, a lot of interesting things over the past day or so. So Friday, we had a bear breakout. We broke below the wedge bottom, and we got a reversal up today. We're testing the November 4th low, which is basically the low of November. And today we formed a fairly strong bull reversal bar. And I thought the math was pretty interesting. We last Friday had a big bear bar and formed a decent sized tail on the bar. And because of that, I thought the odds were we'd find buyers below. So here, this is a little bit tricky for the bears. The bears, they have 3 legs down, 1, 2, and 3, and they have a bull bar closing on its high. What do you do if you're an always in bear? The always in bears, unfortunately, if you're a bear, guess what? It might make sense to get out above today's high. So for the bulls, that leads an interesting opportunity for the bulls. If the bulls can get tomorrow to gap up and have a big bull bar, or at least get a strong entry bar, then we may get a couple of legs sideways to up. First target for the bulls is going to be the high of January, which is the January 6th high right here. So 1/6, that's the high. That's the first target for the bulls. So we'll see. On the 5-minute chart, if I can get this to cooperate here. There we go. Big bull bar closing on its high. Good for the bulls. Probably going to get at least a small second leg up. But strong enough reversal bar, I expect buyers below in a second leg. And then bar 2, we formed a bear bar, probably buyers below. And I suspect buyers below 1. 3, reversal up. We went below 1, reversed up on 3. Good for the bulls, probably going at least a little bit higher. 4, we formed a bear bar, but a bad-looking bear bar, so probably buyers below. At a minimum, I think we'll probably get to yesterday's low, this red line right here at 58.45. The next target would be when I say yesterday, I mean last Friday's high, last Friday's low, excuse me. Then the next target would be the close of last Friday. And then bar 5, bull bar, parabolic wedge, 1, 3, 5, but a tight bull channel, probably buyers below. 6, we have a breakout bar, tail above 5, tail above 6, increases the odds that we may have to pull back for a couple of legs. And then 7, we tried to break below 6, but we found buyers. It's a parabolic wedge testing the resistance last Friday's high, the red line. We're so close to the red line that I suspect we're probably going to have to get there. So therefore, probably buyers below 6 scaling and lower. 7, we got another leg up. We broke above the 6 high, broke above the 7 high. It's good for the bulls, but 7's a bad buy signal bar. And therefore, there's probably sellers above scaling in. We touched the yesterday's high, this line right here, reversed down. What about selling below the 8 low? Well, for one, I think the context is bad for the bears because of the daily chart. I suspect there's buyers below this low. And number 2, we're getting a lot of bull bars. So we have a good gap. We have a big gap down. That's good. We'll probably get a second leg, so I suspect we may fall below 3. But not a great buy. Sell signal bar 8, and then bar 9, a decent entry bar. Good for the bears. We may get a second leg down. And then 10, we formed a reversal up, but probably sellers above the 9 high, sellers above 10. And then we went outside down 11. 11 outside down, good for the bears, probably buyers below. 12, we broke below, and we're trying to get a bear breakout below the bull flag. So we have a bull breakout, pullback. The bull flag is the 8 high to the 10 low. The bears want a downside breakout and a measure move down. 12, good bar, but let's see 13. And then no surprise, 13 is a bad entry bar it's a reversal bar from bar 12. Bears, they'll see it as a wedge. 7, 10, 12, they want a reversal up, and they want to test above the 8 high and a measured move up. 14, bull breakout bar, good for the bulls, probably going at least a little bit higher. And then, so 14, strong enough breakout bar, probably going to go at least a little bit higher. 15, follow through, closing above the moving average, good for the bulls, increases the odds that we're going to get at least a small second leg up. And then 16, we have another bull bar. For the bulls, we have a micro channel from the 12 low. I suspect there's probably buyers below. But one of the concerns for the bulls is that it's 2 legs up. Rally, pull back, second leg up. And it might lead to some variation of a second leg trap. And that's what happened with 17. We had a bull breakout 16, bad follow through, bull breakout 14, bad follow through 15 and 16. And therefore, the odds were we were going to pull back and test the 15 low. So we have a bear bar, strong enough bar. We may go a little bit lower, but realistically, many traders, not really a great buy below, not really a great sell below the 17 low. It's a strong enough bear bar that it'll probably get a second leg down, but I suspect we may have to rally and form a lower high before we get a second leg. 18, follow through selling, good for the bears. Bulls, they're trapped, the 16 low, 18 high. They're hopeful that they'll be able to get out break even, but because of that increases the chances that we may get a small second leg down. And then 19, bear breakout, increases the risk that we go a little bit lower. And then 20, another bear bar, 4 consecutive bear bars, but body's getting smaller, and that's a warning that something is not quite right for the bears. 21, we have a doji, increases the odds that there's buyers below the 21 low. And then 22, another doji, an inside bar, possible final flag. And then we have an outside bar on 23. For the bears, they're hopeful that this tight trading range is going to lead to a second leg down. And then 24, inside bar, increases the odds that we get at least a small second leg up. And then 25, we have a bull bar. For the bulls, strong enough reversal bar, probably sellers above and a second leg down. And then 26, outside down, increases the risk that we go at least a little bit lower. But an outside bar at what could be the bottom of a trading range, really not ideal. And that's what happened. 27, big bull bar closing on its high, possibly sellers above. Whoops. And then 28, an inside bar, second entry short for the bears. A little bit of a surprise, 27, so probably buyers below 28. But I suspect that 28 is not a great buy, and therefore 27 is not a great buy. Neither is the 28 low, so we'll probably fall below the 27 low. 29, bear bar, good for the bears, probably going lower. 30, another good bar. For the bulls, they'll see it as 2 legs down in a test of the 12 low. Bears, they'll see 29 and 30 as a bear breakout, but it's a possible sell vacuum test of support, 2 legs down in a trading range. Therefore, 30 might find more buyers than sellers. And then we have a reversal bar, 31, good for the bulls, but not a strong buy above the bar. Because it's a possible second leg trap, you may have bears quick to exit. So it's really not a great sell above 31. And then you can see what happened on 32. 32, strong enough reversal, probably going at least a little bit higher. 33, good follow through. You often hear me talk about second leg traps. Second leg traps. You often hear me talk about 3-bar micro channels. 1 second. And this is an example of what I'm talking about. 3 consecutive bull bars, buyers below, and a second leg up. 4, now we have 4 consecutive bull bars. Good for the bulls, probably going to get at least a small second leg up. And you can see we started going sideways for several bars. For the bulls, they'll see the rally as being strong enough that we'll probably find buyers below and a second leg up. 39, you can call it an implied high 2. We formed a breakout pullback buy. 37, pulled back lower. 38, high 2. 39, you can also call it a high 1. Follow through. 40, more follow through. 41. Looks like we're going to try and get the upside breakout. The bulls, they want to break above the 16 close and get a measured move up of the overall range. 42, good for the bulls, probably going at least a little bit higher. Pause bar 43, so probably buyers below. And then we formed a doji 44, bull bar 45. Bulls, they're starting to get followed through, but we may have to pull back for at least a leg or a couple of bars. 46, a bear bar. Bulls, they'll see it as a double bottom of 44 and a reversal up. And then we have a bull bar 47. Probably going to get we'll probably go higher, but we may have to go a little bit lower and test closer to the 42 low in the moving average. And then 48, we formed a reversal up. Good for the bulls, probably going at least a little bit higher. And you can see we tried to go higher, 49, tried to go higher, 50, but the bodies have a lot of overlap and the bars are getting smaller. The bodies are getting smaller, and that's why 51 reversed down. 51, what about selling below the bar? I would not. The channel up is pretty tight, and therefore that increases the risk that we might get buyers below. And then 52, reversal up, good for the bulls, probably going to go at least a little bit higher. We have, I'm going to make this blue because I normally make it blue. We have an open gap. And so the bulls, they want a bull breakout and a measured move, so we'll probably get there. 53, bear bar closing on its low. Good for the bears. A little bit of a parabolic wedge. 45, 50, 52. Or you can say 53, but basically that's the wedge. Okay, sell below 53, but if you take it, I'd be really quick to get out. Really not ideal. And you can see that's what happened. 54, it's a parabolic wedge in a tight bull channel, and therefore now you have bulls that are trapped. And look what happened. 55, you had sellers above 54 because the odds favored a second leg down, and now 55 is a retest of the 53 low. We're collecting selling pressure, and that's good for the bulls. That's good for the bears, but we're holding above the moving average, and that increases the odds there's buyers below. The bears, they chested down to the 47 low, which is the possible double bottom. The bears, they tried to get a bear breakout below, but they couldn't do it, and then we got a reversal bar on 59. Looks like we're going to go a little bit higher. 60, strong enough bull bar, probably going to get at least a second leg up. We have an open gap here, so we may get an open gap here. 61, bad follow through, probably buyers below because 60 is a little bit of a surprise. Then we went outside up, 62, followed through 63, and then we tried to get the reversal down 64. 64, good for the bears, but realistically, small pullback bull rally. The bears, they need to break below the moving average. And instead, you can see what happened. The bulls, they got a reversal up 65, 66. Bears, they tried to get a second leg down 67, but the reversal was strong enough and it's at the moving average that there was buyers below it, and bulls bought the 66 low. And then 68, a bull bar. Bulls, it's two legs up, 66, 68. But we're right at the 63 close. The bears, they want to break out, pull back in a lower high, double top, lower high, major trend reversal, but the structure is only 5 or 6 bars, and therefore it's minor reversal. And then we ended up trying to get an upside breakout on 70, reversal down 71. 71, strong bar, increases the risk that would go a little bit lower. And then 72, bad follow through. 73, bad follow through. And you can see, instead of going lower, bulls and bears, bulls started buying, bears started giving up, and then 77 led to a strong breakout. And then we rallied into the close. For stop entries, I thought you could buy above 1, you could buy above 3, betting on an early low of the day. But then when you see 8, probably makes sense to get out. Bears, they can sell, but really not ideal. And then bulls, bears get out somewhere above 12, or if they didn't get out above 10, which I don't think 10 is a great bar to get out of. 8 and 9 is strong enough for a second leg down. Bulls, they start buying somewhere after 13, or they could buy during 14. But if you buy 14, it's buying pretty high in the range. And then when you see 15 and 16, and then 17 starts to reverse down, it's probably better to get out. Bears, they can sell 17, 18, or 19, but if they do, they probably get out somewhere around break even or above the 25 high. And if they don't get out there, they probably get out above 27, but 27 failed to trigger, and we got a second leg down. Bears that are short, they get out above 31 or 32, certainly above 32. And bulls, they can buy. And where do the bulls get out? I don't think they have to get out anywhere in here. They might get out below 51 or 52 because of the parabolic wedge, but if they do, they technically have to look to buy again above 59. And then here, really tough. These bear bars, they're right at the moving average, and it's really selling too low in a bull channel, and therefore there's probably buyers below it for limit orders. I thought sellers above the 7 high, but better to sell at the blue line, which is the prior date, which is last Friday's low. And then I thought buyers below the 10 low at the near the 2 low during 12. So basically buyers somewhere in here, buyers at the 4 low, the bottom of the bull channel. I thought sellers above 26. Reason being is the sell-off here was strong enough for a second leg down. I thought probably sellers above, but 2 legs down in a trading range, really dangerous. And I thought buyers below 36 or 37 or 38 for a second leg up. And at that point, you could argue sellers above bars, but small pullback channel, not ideal. And then buyers below things, but really tough to buy after you see 64. And then buying below 71, I would not. Buy the close, sell the close. Maybe 14, but not ideal. And then maybe sell the close, 19, betting on a second leg trap and 2 legs up. Rally, pull back, second leg. You can sell for a second leg down, but really tough to do. Whenever you have a buy, whenever you have breakouts in a trading range, normally you get a breakout and then hesitation. I call that a delayed second leg. So in other words, you get a bear breakout 19, and instead of immediately getting a pullback in the second leg, you get a hesitation in a trading range. And you can see on this day, we have a lot of expanding triangles. And, basically expanding triangles here as well. So maybe sell the close 29 and then sell the close 30. I would not. Bottom of a trading range. And then buy the close 32, buy the close 33, buy the close 34. And then you can argue buy the close. That's probably it, realistically. Buy the close 42, but, not ideal. And that's probably it for buy the close, sell the close. Okay, question. In channels, every breakout's next measured move leg is called a second leg. That's the same. That same breakout would be the 4th or 5th leg in a channel. If it fails, it creates a double top, which is a second leg trap. Well, the way I look at it is this channel, even though it looked weak, there was a lot of consecutive, even though it had a lot of consecutive buy climaxes and looked weak. The biggest problem with the channel is the biggest problem for the bears is it's basically a small pullback rally. And so look right here. That is what you were selling. You were selling a channel. She had a spike and pullback channel on the Globex chart, tight trading range. You were selling this. Someone was. This is a different question. But when you keep looking at double tops and something like this, where all the bars are above the moving average, that's just a really dangerous thing to do. Developing you're talking about building a 3-bar microchannel system. Is it feasible to structure the system to be profitable without considering market context? If not, what context? Well, unfortunately, I think, you can call it a system, trading plan, whatever you want to call it. Everything requires market context. And therefore, you can take any 3-bar microchannel setup. You're going to have some form of context in it. A question: while analyzing the market, do you use ETH data to get an idea of what the market did overnight, or is it not necessarily because of the daily chart on the regular session? Is it different from the extended chart? So basically, what do I do in the pre-market? Yeah, so I look at, generally I like personally looking at the ETH, which is the Globex chart, other than the 5-minute just intraday. And a lot of times I'll just trade the Globex chart. So for me, and there's plenty of times I'll just look at this chart and wait for the open and start trading it because, I can quickly just flip to like a 45-minute chart, bear breakout, pull back, second leg, and here's where we are. So I know we're kind of low in the range, probably going to pull back. Same thing, 15-minute chart. For me, it doesn't matter what you look at. You can look at a 5-minute chart of the RTH, which is the regular session. You can look at the Globex. The biggest thing is if you look at this chart and you see a gap down, you can look at the day only and see the reason for the gap. I did not mean to do that. Whoops. So here's the daily chart. Wrong button, but here's the daily chart. And you're low in the range. And therefore, you know that the magnet today might be the low of the day in the open. But what can be really helpful is if you have a Globex chart, let's say, right here. There's your Globex chart. What can be helpful is understanding what the overnight session did. So here, we had a bear breakout late in the overnight session. You know we're probably going to go above it sometime soon. All right, so I appreciate everybody. That's all the time I have tonight. I appreciate everybody taking the time to join me on this live stream. And I will start doing more end of day reviews on this YouTube channel much more frequently. So tomorrow it'll be in the trading room, and then Wednesday I'll post one here. So if you're in the trading room, you can take a look at the end of day review. I think Joey also does end of day reviews as well, pretty much every day. So you can take a look at his channel. All right. Thanks everybody for tuning in, and I will talk to everybody very soon.